Hello, and welcome to another update video on Bitcoin. I'm here on the daily time frame, and Bitcoin is currently testing Fibonacci support. We're currently testing this support zone between $83,130 and $96,180. This is our standard support zone that we've been tracking now for quite some time. And as I mentioned, the orange scenario remains preferred. This indicates that the price could give us another bounce in a wave 4 before we then finish this A wave to the downside, or at least put a more meaningful low in place. There are many combinations. I explained them yesterday in the last video, or in one of the videos yesterday. But basically, I think it's important to understand that we're now in a support zone, and if a 5-wave move up unfolds from this support zone, it wouldn't be surprising, because the market is very much oversold. At least a larger bounce becomes increasingly likely. So we're currently, trying to hold above the golden ratio level. It's not necessarily a surprise that we do this, because that the bulls are showing up there, because the 61.8 fib level is a level where normally bulls show up. It's too early to say, though, that the bulls are really taking the lead and are driving the price higher. There are still bullish scenarios that are possible from here, right? So it's still possible to rally in a third wave from here. Yeah, this would need to prove itself for sure, but because of that, you cannot simply say that a bear market is guaranteed or something. Yeah, it's very important to understand there are still bullish scenarios. But guys, we're here on the daily chart. We have a support area on the daily chart, and we just have to watch the micro patterns in this support area to see how they unfold. You cannot simply assume that one or the other scenarios will unfold. We have to see how the micro patterns unfold. Yeah, too many people try to predict price action, whereas it's really about understanding the different time frames, the zones of interest, and then when you know these interest or these zones of interest, these areas of interest, it's about monitoring reactions in this zone to just see how in the moment the buyers and the sellers react. And Elliott Wave is a fantastic tool for that, because it allows us to understand the different patterns on different time frames, and it allows us to identify and understand the reactions. And do we see actually meaningful reactions, right? Because if you use like any method, it's typically not that a framework like that, not like Elliott Wave. And so if you have a good understanding of what constitutes a trend change back to the upside, then it really allows you to interpret price action accurately. Of course, nothing is a guarantee. Markets are still probabilistic. They can change their opinion. But exactly that is why we use the method, because we do the work every single day. We watch the micro price action, and then we see those, let's say, mood changes very, very quickly. In the end, the market is a reflection of market sentiment, and it allows us to recognize very quickly when sentiment shifts. It doesn't necessarily allow us to predict it will change here, even though we have these zones of interest where a shift is likely, right? Or for example, these Fibonacci zones that you see on the chart, they are a representation of market sentiment, a mathematical representation of market sentiment. So it typically indicates that when we are in a zone like that, there is a good chance that sentiment is going to shift, okay, back to bull mode, at least short term, and that we will see a reaction. But again, do we see it right now? I'm not convinced yet. So that's exactly why we're also tracking different time frames, not necessarily in every video, but they're covered very, very regularly. So the next support levels here are 90,566 and $83,132. We recently saw the price broke below the 55-week exponential moving average, which is highlighted here in white, which is, just a support level we lost, okay? It is not like a bull-bear market switch. It's not, but it's one of the, let's say, the triggers, one of the warnings that I mentioned already weeks ago, right? If this one, I gave you weeks ago 3 warnings that would be an indication that, a bear market has started, even though I don't really like to think in these boxes and these labels so much. I explained that yesterday, because that really, it restricts you a lot. Markets are not like, black or white. You know, they're not just like, you know, bear or bull. It's not like that. You know, there are many. It's kind of multi-dimensional, you can say. There are many different degrees and nuances as well. But anyway, of those 3 warnings, yeah, 2 already triggered, which you know if you watched the videos weeks ago, right? So yesterday or a couple of days ago, someone said to me, when do you finally call it a bear market? And I'm like, well, 2 of the warnings of the 3 are already triggered, right? But you know, I'm not the person who tells you it's now bull or now bear, because, well, if it becomes obvious and we can confirm it, yeah, but I said from the beginning, the real confirmation from an Elliott Wave point of view in this cycle will probably only come if we break below the April low. And a break below 83K is going to be very convincing. But really, from an Elliott Wave point of view and market structure point of view, I mean, in the end, it is the rule of market structure. You can really only confirm it if you get a 5-wave decline that is large enough, followed by a 3-wave move up. But what if we only get 3 waves down? Yeah. Sometimes, you know, modern markets sometimes don't give us clean 5 waves anymore. And so it's going to be very difficult to forecast, or to not forecast. I mean, we already highlighted here the warning, the bull market might have topped, right? You know that. But to really confirm something can take some time. And I knew that. So that's why I said from the beginning, guys, it'll take a while until I can actually confirm it. So that's the power of Elliott Wave. It gives a really good idea of the risk and the parameters. And when we're up here, yeah, and support is down here, and the confirmation level is somewhere down here at 74K, I mean, the risk is massive, right? And obviously now the price is coming down. We're now testing that support area. So we'll just have to watch this area for reactions. And the question is, are the reactions meaningful at this point? No, they are not. They are not really meaningful. We do have something that we could call a potentially impulsive move up here. Maybe it can even get another high. But we're basically now in this support zone. You see how the bulls and the bears are fighting around this 61.8 retracement. These are micro patterns. Yeah, I can tell you that from a micro pattern point of view, I haven't seen enough to really confirm to really confirm that there's just not enough to confirm that we are reversing to the upside. Okay, so you can see that there is a micro support area, 89,545 and 91,315. I added this already earlier today in my member update. This is basically the micro support zone to watch over the coming sessions, maybe just today. And if we find support here, we can grind higher into resistance. And this resistance area is, well, the first meaningful one. We've been watching it over the last few days. Price tested it already, got rejected. So we basically just need to, you know, maybe to keep it very simple, we're currently below resistance. And the bulls need to get it above this resistance area for a first sign that a low of sorts has formed. Whatever happens below is basically noise. What really matters is, can we break back above it? And that this resistance area is meaningful, I think price action shows. Rejection, another small rejection. So we'll see how the price reacts to this resistance area. Obviously, I'm rather watching for an upside reversal than downside continuation, even though another few squiggles to the downside are possible in this orange scenario. Yeah, because we are still coming from a downtrend and we haven't confirmed the reversal. So of course we have to keep the door open for another low. But this is the area, guys, where we're watching for that reversal to happen. So, you know, this is not, I don't see any short trade setup here or anything, right? I mean, I've even started to accumulate. It's simply that we just don't have enough evidence to call it already a reversal to the upside. But this is the zone to watch, okay? So I hope that is very clear. Any break below 89,545 would open the door to another dip towards the 85 to 86K area that we were watching yesterday. But then the Nvidia earnings came in and it gave us a small move up, but not a higher high even, you know, haven't even touched resistance. So, you know, I think we'll just monitor these zones. Hope you enjoyed the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in additional updates, then also check out our membership options on our channel page. we explain what the membership includes. Yeah, there's a short video that explains everything. You get access to a lot of member-only updates, plus our member live streams, plus as a gold member, you can even access our Discord server, where you can join a lot of different additional updates. You can join a lot of additional updates. An Elliott Wave course is there. You can join the community chat. You can ask questions. You can connect with me, with the team. So it's a large community worldwide. And if you want to join it, check it out. Thanks so much. Bye-bye.